Okay, well it's 9:45 and my computer crashed, so I had to reload everything and it took a really long time. But right now, um price opened. It's been 15 minutes since market open, and on the 5 minute, this is all it looks like. We just took out London high on NQ. And on ES, it looks like we're going to take out London High. We got pretty close. We got this 5 minute liquidity. We got this 5 minute buy side liquidity. So, yeah. I'm not looking at placing a long. I'm actually looking bearish. So, on the higher time frame, we have this SMT. So, and we also have some good sell side liquidity too. Um, yeah. So I'm just looking bearish. Uh, yeah. On the 1 hour we're bullish, right? But the 4 hour we are bearish still. It's kind of just like choppy price action. Um, yeah. So right now I'm actually looking bearish. We just took out all this liquidity from the pre-market. The 5 minute highs we got taken out. London high. So I'm actually looking at taking a short, maybe soon. Not right now. Um, I could always take a long too. We also have these highs, 1 hour high, 1 hour high. This is ES. I think NQ has better take profits for a high. We have all of this stuff, so we could, complete the SMT by going up there, which is pretty likely because we're closer to these highs than we are to these lows to complete this SMT. So we could actually be pretty bullish, but we'll see. I have this equilibrium set. I gotta get in my gap, right? Fair value gap. Um, yeah. And on ES, I don't really want to take it long on ES. I don't think it has as good price action. I mean, take profits, I mean. So, but we'll see. It just keeps going up. So there's really no entry. And I placed my trades after 940. So we had this little gap right there that was filled, but it would have been before 9 940, so I wouldn't have taken that. So, and we just took out London high too. So I'm looking bearish. Cause if you look on the higher time frames, we're bearish on the daily. Um, yeah, we're like in the sell-off right now, so I think we're gonna continue that. So we'll see. 5 minute liquidity. 5 minute liquidity. We have some other liquidity down here, right? Asian low, London low, which we did not take out, even though we got super close to it. So I'm looking pretty bearish, right? But now we have these highs on NQ, which for ES, we had already taken those highs out with this move. All of these highs we got taken out, and on NQ, they're still present, these highs, and which made this SMT, right? And then we have this high right here. So it looks like we might be taking them out. And then we have some highs over here. So we'll see. Yeah. Yeah, price just keeps going up. So not much I can do. We might get a retrace, a small one, into this gap, right? Because we've already taken out this liquidity, so it would make a good spot for like a retrace. It's about 950, so that means this 5 minute candle is going to be done and then we could get like a retrace into this gap, and I could take a long. And if I took a long, it would be on NQ because these highs are really good take profits. They're really obvious. There's an SMT. ES took out these highs, and if we're going to take a long, then NQs are going to take out these highs, and that just makes for the most obvious, most likely price target to get hit. So yeah. And if I took a long on ES, um, I mean I could, right? I could. We have this high, but I mean I'd rather do it on NQ because I have a better feeling it's gonna hit those um, those liquidity, right? So because this is all really good, they're grouped, they're close together. It makes a really good draw on liquidity. So yeah, and maybe we could maintain it up to this high. But we'll see. It's unlikely we would hit this, but maybe. We'll see how price action looks. Um, yeah, we made a little move down in the first minute of this 5-minute candle, so I think it's likely we could see a retrace. That would be nice. I was really bearish coming into the market, right? Because I was like, awesome, we have these lows, right? London A's in session low, and also London high was this, which we swept out in London session. So I was also bearish because of that. So, but it looks like we might just go for a long. Maybe, if we can get in an entry. It's so close to those highs, it might just take them out without a retrace, and then I don't get in. And if that's the case, then, I don't take a trade, and that's okay, right? So, yeah, it's okay. I did take a trade yesterday. I made 160 bucks. So, it was a pretty good trade. It would have been more if I had gotten in a better entry, but I was driving back from school. So, yeah. I could have made a lot more money though yesterday. Could have made a lot more, but it's okay. And we're gonna take out those highs. Shoot. Yeah, we hit equilibrium too. So New York pre-market starts at 8 o'clock, and you can clearly see the sell-off that happened right around there. And we hit this equilibrium from this low to this high when we were in an uptrend, and then we continued that after we got in that discounted price range. So I mean, that's another reason, if I, so same thing on ES too, right? Uptrend hits the equilibrium and goes up. So it doesn't look like we could take a trade. Maybe if we get like a trend continuation on the 5-minute, maybe I could, target this high, maybe this high as well. maybe look on ES for an entry, right? Because we still have this high and then this one. So we could still take a long. Depends. We also have FOMC minutes later today at 2. So I'm not even going to use the equilibrium because I have this gap right here. So yeah. See, on the 5 minute, typically, if we're gonna have a breakout, typically we get like a 5 minute retracement candle. So far, we haven't. So, yeah. It would have been nice if we could had a 5 minute retracement candle before we swept out these highs over here, because if we get it now, it could be a reversal and not a retrace. So it's kind of hard to distinguish, okay, we took out that liquidity, this 5 minute down candle could be an entry, or maybe it's going to break structure and it's going to have a breakout to the sell side. Because you can have two breakouts in one day, it's not super common, but sometimes it happens, and it's still relatively early. It's only 9:57, and we've already had like a massive bull one, and on the higher time frames are bearish. So maybe we get a reversal. Sometimes the market surprises you. So yeah, and we just took out that high. So all those take profits, right, are all taken out. SMT is completed. So we're not. So that bearish SMT I had marked up is now respected. So we can get rid of that, and ES is going to take out this high too. So yeah. Yep. Looks like we might take out this high as well. Maybe. I think we can. It makes a pretty good take profit. This one is eh. I mean, if I take a long, I'm not going to hold up to that high. We're already pretty extended. So if we did take a long, I wouldn't maintain past that high. I would just make this my take profit. So hopefully we get a retrace and make some money today. If not, then I just come back tomorrow. So, yep. So that's the 5-minute candle we just finished. That left us with another 5-minute gap. So we'll see if this one gets respected. Probably not. We'll see. Even then, I might not take the trade. It depends how the price action looks on the 1 minute. So equilibrium, right? I think we should be getting a retrace. So it's unlikely to think we could get reversed and take a short, because these lows are like pretty far, 1.82%. It's kind of like a really big move. This move was only, oh, that's not the right tool. This move was pretty big in itself, 1.31%. So to think we could get another breakout like this to the downside is kind of unlikely. So five-minute gap. Maybe I should title that. What? There we go. The heck? Okay. Oh, that's not the right thing. If this high gets taken out, I think I'll just be done for the day. So, because it would be really unlikely if we take a short, right? If there's a breakout to the downside after this, right? I'd be pretty shocked. So if this high gets taken out, I think that would just be it for the day, right? I don't know how else I could take a trade. So pretty crazy price action though, right? Market open is right here. And then it just bull ones. Yeah, this is stupid. I'm getting rid of that equilibrium. we just made another 5-minute cap. So I'm gonna get rid of this one because it's, I mean, yeah. At this point, I think we're so close to this high, we're gonna take it out. So yeah. Oh my god, I gotta sneeze. That's my dog. He's so cute. You're so cute. Okay, okay, cute. This is so boring. What is the news like tomorrow? Tomorrow we don't really have much news, right? Existing home sales. I'm not gonna wait for that. And we have the unemployment rate, so that's kind of big. Kinda. Non-farm employment change and average hourly earnings, and then manufacturing index. Yeah, and then Friday we have um we have some stuff. We have PMI at 9:45 Friday, and then the revised consumer sentiment. I think I can take a trades before this. Doesn't look volatile, so we'll see how it goes. Typically, I think that stuff usually kind of is volatile. Typically, I think before I rate it, but it doesn't look like it's, you know, high impact. So, yep. Thursday on the 27th is a bank holiday, dude. Because of Thanksgiving. Oh, man. That sucks. Oh, no. Okay, back to today. See, I don't know if I really want to take a trade on this. Um, I mean, it's pretty obvious. I think it wants to take that liquidity out because, I mean, after all, where else are you gonna go? There's no like liquidity except the liquidity all the way down here, right? So, I mean, it's obvious. Like, even if you get a retrace, I think we're still gonna take out that high. It's just, it could be a small retrace, it could be a big retrace, so you could get stopped out and then it goes in your direction. So that's kind of tough, right? So you got to be careful. But it actually looks like we're gonna take this out. If it takes this high out, then I'm done for the day. I'm not gonna trade because there's gonna be nothing else to trade. After this, market's probably gonna chop around a little bit, maybe have a small retrace, but I'm not gonna trade that because that's just not what I do. So my strategy is not for retraces unless it's like on the high time frame, like it's a big retrace, right? And the market hasn't broken out yet. The market already had a breakout, so you know typically after price action like this, the market's just gonna chop around for a while. Maybe have like a really choppy retrace, but I mean things could go wrong. You could get stopped out. It's just messy, so don't do that. And we also have FOMC minutes later today, so you know I wouldn't want to hold a trade like that, a retrace if price action is going to be choppy. So maybe it's gonna retrace. I don't know. It's 10:13. Ugh. I almost want the markets to take out the high, just so I don't have to sit here all day. Oh my god, dude. If ES takes out this high and NQ doesn't, I mean, if NQ takes out, I'm on NQ. If NQ takes out this high and ES doesn't, I'll probably just call it a day, right? Because at that point we'll have a bearish SMT, and it's just, like you can tell with the price action right now, it's slowing down, right? After all this, it's slowing down. So even though I know it's going to hit this high, it's like, what can I do, right? I place the trade right now. What is my risk reward ratio going to look like? Is it going to look like this, right? Trade, and then my stop loss all the way down here? That's stupid. It might get really close, and then it retraces, and then goes back up. Because sometimes that happens. So, yeah. This is really boring, dude. Every time they, like, every time the market gets really close to, like, the last draw of liquidity on, like, the breakout, it, like, just gets really slow and choppy, I guess. Like, all it needs to do is just a little, upside candle, and the high gets taken out. But they'll just, like, chop around as soon as they get close to it, and then they take it out. Like, that's what happened yesterday with my trade. Oh my god, it was so annoying. Okay, we took it out. Yay. NQ is probably going to take it out too. I mean, ES. This is ES. And ES is probably going to take it out. and you see like there's really no entries, right? And if I am gonna get in an entry, it's not gonna be like a stupid gap like this. Like I wouldn't take this, because how I look at it is, after when you look at this entire trend, right? This entire uptrend, this entire breakout, if I place my trade right here, that is in the premium price range, right? Like if I could get closer to equilibrium, that gives me a much better risk reward ratio, better chance of not getting stopped out, right? So all those things. That's why, if I like, even though you might have an entry like this, it technically is an entry, it's way too risky. You're likely to get stopped out, and the risk reward ratio isn't even going to be that good. Like, look at this. Like, it's not an ideal retracement. This is not a retracement. Typically, there should be like a 5-minute down candle, but, market just bull ran, and that's, sometimes happens. It's pretty rare for the market just to bull run without a retracement at all, but it happens time to time. Like, it can literally happen right when market opens and it just doesn't stop. Sometimes that happens. So, um, like you see, this would have been a good trade, maybe, right? You get this equilibrium, but typically I wait for the candle to close, and then right when the candle closes, I place my trade. So I wouldn't have placed my trade on any of these wicks. I would have placed my trade after the candle closes. So I would have placed my trade right here, if I took this entry. And then I put my stop loss probably at the bottom of this to this high, because I mean, I want a good risk reward ratio, and if you look at this trend, there's no other low to put your stop loss at, and I don't do 1-to-1 ratios, so I'm not gonna have something that looks like this, right? I don't do this because it's like kind of dumb. If you get a trade like this, like, it's not even worth taking. So yeah, and ES just took out that high, so I'm done for the day. But I mean, this is like, even though this was a trade I, could have took, it's way too premium in the price range. This is equilibrium, and I'd be placing my trade like way too far away from that equilibrium. That's why I had these 5-minute gaps. They're an ideal retracement, right? Because this is a high time frame, kind of. This is like a big breakout. So if I'm going to get in an entry, I want to see a sizable retracement, not a little inky dink retracement like this 1-minute, candlestick on this tiny 5-minute gap. It's kind of stupid, right? And it's risky. And like, that's not a breakout, right? From this low to that high, right? From the, let me get back my thing, dude. You see, from this entry, from when this candlestick closed, right, to this high, that's not a breakout. Like, I'm a breakout trader, so I'm not going to take this anyway, because this isn't a breakout. Because when you look at everything else, like, it would have been awesome if I could have gotten in somewhere down here, right, buying on a breakout in the max premium price range for, a trade. It's not a breakout. You're just kind of dumb, almost. I mean, you could have done that and made some money, right? So, but that's the thing. You don't really know. You have to be safe with trading. It's better to be safer than sorry, right? So, yeah. That's it, right? Market opened at 9:30. That's why I had that there, to like show you guys where market opened. And that's it. So no trade. That kind of sucks. But, I didn't lose money, right? You got to be patient, and yeah. So hopefully I can get a good trade in tomorrow, maybe. So, and if not, we also have Friday. So the week isn't over just yet, because right now I'm sitting at like break even, basically. I'm down $4. I would have made more money on this trade if I got in an entry sooner, but I was driving back from school, so it is what it is. Yesterday I would have made a lot more money, but it's okay. I did make some. So, yeah.